It is July 26th. It's a Friday. And after I take you through the account, we'll show you what I've been doing with Cameco. And the screen is a little bit brighter today because I'm still filming during the day. So the white screen is kind of projecting a little bit. Of course, this is the video log. It takes 30,000 to a million. And without further ado, let me show you what's going on. I did have a big drop yesterday, so of about, I don't know, $900 or something like that, recovering some of that today. Most of it is uranium and Apple. Apple was up slightly today, as well as the uranium companies. I'm still unsure whether I should hold on to them or not. It's pretty risky, but Cameco, I'm sure I want to hold. And that's kind of what I want to talk about today. So I'm using some of the EXK gains. If you remember, I sold the last of my 300 shares here of EXK Endeavor Silver at 254. It's below that price now, so if I buy in, I'd probably be doing better. Let's actually take a look at the price of EXK. It is sitting at $2.40. So I'd actually be doing good if I rebought in here, but it might drop further, it might go up. Doesn't matter, we'll see what happens. But for right now, let's take a look at Cameco and see what are some of the latest moves that are made. So Cameco had a big loss, and normally this week and this month, this week especially though, it's down almost 10% to 11% for the month, 17% for 3 months. But I'm not really that worried because if you look at the long-term chart, it's just bouncing. It might just bounce off of this trading channel that's been established. There's this really strong support line here. Obviously, Robinhood is not ideal for doing technical analysis, and I'm not much of a technician, but it's pretty clear there's a support line here, and I'm pretty confident it's going to bounce back off of it. So what I did was I had sold some more calls. I'm sorry, I sold one call, but I sold some more puts, right? So I sold a put here, another one for August 30th, and then I sold another one a little bit sooner at August 23rd. So if Cameco drops down to $9.50, which is below that right now actually, but I'm willing to buy at $9.50. I'm expecting Cameco to appreciate from here. I don't think it's gonna keep dropping all the way down to like $8 range. So I'm trying to bank on that and collect money from a sideways market. Like I made a video about making money off a sideways market last time, and today I want to show you just the large amount of options that I've been selling against Cameco, right? Against my money or against the stock. And I also initiated this call for January 17th to lock in at least some gains. It's an $11 call, and my average price is $10.50 right now, $10.58. So if that call does get triggered, I'll end up selling 100 shares for $11 each, plus the premium, which was I think 45. It was $45, now it's 38. So I've actually gained $7 on that already just today from getting a good deal. I have a total of 7 contracts, and this increases my cash collateral for Cameco to $4,800. All right, so that's a lot of cash to have on the sideline, but I'm collecting all this in premium for that, for my time for waiting. So if you calculate all that, and let's say it goes down to 0, that's, what is that, almost 200, it's $200 or so for waiting for a month or two. So that's great. I'm willing to do that. It's a good deal for me. I also have 200 shares locked out of the 300 that I now own because I was forced to buy 100 shares for $10 each. Oh, this is cool. Yeah, there's the history right here. You can see $10 put assignment, which I'm neither happy nor unhappy about it. I'm just very happy that things keep going, right? So this is how cool I am about all this, that we can have a 10, I can have a $10, 10%, excuse me, drop in a week, and I'm just double, selling puts. Like I'm totally okay with that. And if I had some more buying power, I would sell more puts. But I don't want to go on margin in order to sell them, because I want to preserve that. I want to have some purchasing power available to me in case Apple has a really big downturn or something else that I can profit off of. For right now, Apple's staying pretty stable, so there's no need to no need to deploy that purchasing power. And speaking of purchasing power, I want to tell you exactly how much I have left to convert. So I have emerging market bonds, which I'm not big on holding bonds, but it's a nice place to park cash. So, and it's already appreciated $332 or 6.69%. So I park cash in the emerging market bonds. It pays a nice dividend, excuse me, $21 each month for about 53 or $5,000 worth of cash, at least my initial investment there. And the other way I park cash is GSY, which is short-term US Treasury notes. I have about $3,000 there, and it gives me roughly $7 each month for those $3,000. So it's a lot less than the emerging market bonds, but it suffers from virtually zero volatility. Well, I don't want to say suffers, because that's kind of a negative connotation. Experiences, how about that? Experiences virtually zero volatility. As you can see here, for 5 years, it's gone from 519 to, 5013 to 5036. So it's the same price over 5 years. And the lowest it ever reached was 49.69. So the way this ETF works is it just recycles short-term paper, and so that's why it looks so jagged. These are all the different like payouts. Boom, right? Boom, every month. So you can see how this ETF functions. It's pretty convenient. Like back in the day, I used to actually buy treasuries from the treasury. That's where I used to buy them. They used to give me this card, and I would have like the verification numbers on there. And so when I go to when I had an account with them, and so when I go to purchase, I'd have to enter like this code schematic thing to make sure that I'm a legitimate purchaser of treasuries. And what it would do is it would charge me, let's say I do $1,000, it would charge me like $997, right? And then at the end of the month, it gave me 1,000, right? So that's how it works. That's the actual mechanic, right? So anyway, just a little interesting tidbit there of how things used to work. And now it's just so convenient that I can just buy an ETF and just hold it, and everything happens like more than automatic. All right. So I wanted to update you. And by the way, uranium, this little pop here, we're still way below the price that it was before the announcement that there was going to be no legislation on energy fuels and URG. It's sitting like more than $1 below at the moment. So it's kind of poor performance, but at least it's not. At least it seems like to be bottoming out to an extent. It's not dropping any further. So, I'm only down. Oh, look at this! I have $1,337 worth of energy fuels, and 00, by the way. And for those of you who don't know, that spells LEET in LEET language. Very nerdy. But plus $84 today on energy fuels, plus 45 on the options plays. I still have $475 worth of liability I gotta erase. So 400 shares of collateral, $1,500 of collateral here. So these 20 calls that I bought is what's really hurting. But it's if it for some reason it happens to go to $3 or something in the next month, at least until August 16th, I'll be in good shape. Unfortunately, the task force that's been set up to figure out how to have more production from domestic uranium producers by the executive branch, it's not until 90 days, but I didn't know that. So I bought them for August 16th, so I may just buy um, I may just buy some more calls later out if they're cheap, but they might not be. I'll see when the time comes. When these expire, I'll figure out whether I want to purchase some calls or not. I mean, I'm selling here and then I'm buying here, trying to collect premium versus my gambling strategy is just kind of contradicting, but there's a time event in play, so I want to play that event. And so it does make a little bit of sense. Okay, so that's enough about uranium. Look at how many stock options I have right now. It's huge. So many contracts. Look at this. 2 sells, 20 buys, sell, sell, sell. If you want to know how much exactly, this is my account. You can see the highest total returns, highest equity. You can pause it and look at it if you're really interested. And then over here it says, look, options collateral, $46,300 worth of options collateral right now. Most of that is Apple. So that's about it. In good standing, perfect, feel good. I should be feeling good. All right. Well, I think that's enough. Just update you on Cameco, show you some of the moves that I've made, and I keep going with the strategy about selling options, expecting a sideways market. Cameco is one of my favorite companies to trade options with, and so I continue to do so. It's a very linear movement. It's been linear for many years, and I expect it to be linear for at least a couple more years until uranium experiences like a silver moment that silver's having right now, where silver is climbing up really high and it doesn't make sense for me to do sideways moves, right? So I'm guessing that something similar is going to happen with uranium at some point. I'll profit a little bit off of it, but I'll stick to companies that are moving sideways so I can make my percentage gains. Because once things start getting really volatile, it doesn't just go in one direction, it goes down as well. So if I stick and make too risky of a move, I might lose everything. At least at this point, I'm not going to lose everything, right? I'll either have stock or cash. So in a non-parabolic type of environment. Okay, I think that's about it. Have a good weekend, y'all. I'll probably make a video on Monday. Nothing over the weekend. Nothing really happens. So, but if I come up with some great idea about something I want to share, I might do another video. But if not, I'll see you on Monday. All right. I think that's it. Peace out.